Yesterday we had a bull channel, so a bear flag. You'd expect a bear breakout. We have a breakout below this, but we're right around the bottom of a broad bull channel using those two lows. We also have the 60-minute moving average support and this low as support as well. Yesterday was an outside day, and when you have an outside day, there's an increased chance of either an inside day or a day that mostly overlaps yesterday. So if we get near yesterday's high, the bears will sell, trying to keep it from going above yesterday's high. If we get near yesterday's low, the bulls will buy, trying to keep it from going below yesterday's low. If it does go below or above, it probably will not get very far. An outside day is a 2-day tight trading range, 2 overlapping days. Right now we're opening in the middle third of yesterday. That means today probably will overlap yesterday a lot, and it might be an inside day. We're overbought. We have 3 pushes up, 1 pullback, 2 pullback, 3. So yesterday was the pullback and the third push up. So it's a parabolic wedge. I've been talking about the 3 sell climax highs here. This was very high probability, and this was high probability of reaching, and this is probably 50-50 that we'll get all the way up to the top of that sell climax. I do think we're going up to and slightly above the November low, but we might pull back first, maybe all the way down here, less likely all the way down here. I think we're in a trading range, big down, big up, big confusion. So we're probably sideways for several weeks. Today's Friday, so what today does affects the appearance of the weekly chart. Prior to today's open, it was a big bull bar closing on its high. With today's gap down, it's less bullish. We have a tail on top. Weekly support and resistance on the daily chart, you can see the November low, the low here, and the February low. So those are all potential targets. 5-minute chart. I'll put it on a 15-minute chart. Possible that we get all the way down to the February low and last week's high, but unlikely. The days have been getting smaller, and that would require a very big day. Back to the 5-minute chart. So, bull channel, bear flag, you expect a bear breakout, and you'd expect the channel to convert into a trading range. And we're in the middle third of yesterday. Yesterday's an outside day. Today will probably mostly overlap yesterday. So buyers somewhere around yesterday's low and sellers somewhere around yesterday's high. Less likely a big trend. First bar of the day, always 20% chance it'll be the high or low of the day. Since it's an inside day after an outside day, and today's probably a trading range day, you have to assume 80% of the time, right, it's not going to be the high or the low. And that means you have to assume at some point today we'll go below 1 and above 1. The bulls are hoping it's a higher low in a bull channel, and therefore a low of the day. So the lower low double bottom 66, higher low double bottom here. But most bulls would want a pretty big bull bar closing on its high to buy above. I think traders are expecting a confusing opening. We went up and then we gapped down pretty big. Near support, 66 low, bull trend line, 60-minute moving average. Globex chart, we just went through the Globex low, and that was a goal. It's always a goal for the market to break out of the Globex range, either below or above. Kind of a breakout in channel, so spike in channel. Odds are we're going to get a bull breakout above the channel and convert into a trading range. We don't know if this is the end of the channel. We could go down a lot further, for example, down to that low. But on the Globex session, 15-minute chart, bear channel, bull flag, we should get a rally. And we've already had the sell-off bull channel bear flag on the day session chart. First bar of the day, a doji, a neutral bar in the middle of yesterday's range. So a neutral location and a neutral bar. Consistent with a lot of trading range trading today. With the ranges as big as they've been, 30, 40 points, even if you have a trading range day, there are typically good swings. Now, 80% of the days have at least one reversal in the first hour, hour and a half. And that's consistent today, especially with it far below the moving average. Market is not far more bearish than any other day, at least not at the moment, and therefore bears do not want to sell this low below the average price. The bears want to sell, but unless we start to get a series of bear bars, they don't want to sell far below average, and that reduces the downside. And so far, the 60-minute moving average and this low are more important support than this trend line. So I think we probably have to go at least a little bit lower, but not a lot lower because we're too far below the average price. And traders know we've had a lot of trading range trading over the past 7 or 8 days. And trading range trading, traders are hesitant to sell low. Now, I said there will probably be buyers around yesterday's low and sellers around yesterday's high. And the market right now is deciding which it will test first. It's possible this is the high of the day and we break below yesterday's low. Not likely. Traded below 1, but a doji bar, you have to assume limit order bulls will buy that 1 low and scale in lower. With these trading range opens, you often have to wait an hour or more before there's a good swing setup. So you can see the bulls buying the low of 1 have already made at least a 1-point scalp. And we're probably going to have a hard time going down very far because we're far below the average price and traders are expecting a lot of trading range trading and they don't want to be selling too low. That means we're probably going to go sideways to up toward the moving average. We may go a little bit lower down to the 60-minute moving average, but probably at some point starting in the next several bars, we'll try to test up closer to the moving average. Always in long or short, when you have an unclear open, for example, opening in the middle of yesterday's range with a doji bar, I usually want to see at least consecutive trend bars up or down to before I decide on the initial direction. And I like one of the bars to have a decent sized body. And finally, I like it to one of the 2 bars to close on or near its low. So right now we have 1 bear bar closing on or near its low, but the bears need a second bear bar. Micro double bottom, down on 1, up on 1, down on 2, and the bulls want up on 3. Can you buy above 3? Micro double bottom, bull trend line. I'm not expecting a trend early on. If 3 is a pretty good size bull bar closing near its high, it's probably an okay scalp, unlikely to be the low of the day. We still have room to the 60-minute moving average. Yesterday we got there, we got close to it here, and we still have room to it here. 3 bars almost completely overlapping one another. So a tight trading range, much better for limit order traders than stop order traders. More traders would be willing to buy if this was down here or down here. And therefore we may have to go a little bit lower. I erased the bull trend line, even though the market is paying attention to it. I don't think it's as important as this low or the 60-minute moving average. Suppose 3 closes on or near its low. We still have the two problems. We're at support 60-minute moving average, and we're far below the moving average, and this is not especially bearish. A lot of traders do not want to sell this far below the average price. It looks like we're going to get down to that 51 low, but not easy to trade. Big risk, low probability. Okay, so there we have consecutive bear bars, but big tail, top and bottom of 3, and big tail, top and bottom of 1. Those are trading range bars. When the market went up, it went down. When it went down, it went up. So those bars tell us that the price is just about right, and therefore selling at the bottom is probably not good, and buying at the top probably not good. Much more limit order trading. Here we have a gap down and a bear bar with a big body closing on its low, and bulls made money buying below it. Not strongly bearish. This is the 4th bar in a bear micro channel. We've been getting these micro channels on the open lately. We had a 5-bar one a few days ago, and then yesterday a 6-bar micro channel. And so far today, 4 bars. Whenever the market has trading range bars and trading range trading, but it's far down from the prior high, you have a lot of traders looking to buy, betting that in a trading range better to buy whenever it's low and only sell when it's high. So when you buy above 4, if it's a bull bar closing near its high, it's still a 4-bar tight trading range and not particularly bullish. So I think not a very good buy, just like selling below 2, not a very good sell. 2, it's a 9-tick trap. It fell 9 ticks below 2 and reversed up. A lot of the bears were trying to scalp for 2 points because the bars are pretty big. It had to fall 10 ticks to give them their 2 points, and it did not. And when it started to turn up, a lot of those bears bought back the shorts. And that's what created that tail on 3. Too many limit orders, exactly 9 ticks below 2. Too many bears trying to buy back the shorts. If bears are trying to buy back the shorts, are they betting on a big bear trend? No. They don't have a lot of confidence that we're going lower. So that also reduces the chances of this going down very far. You do not want to see, if you're a bear looking for a swing down, you do not want to see evidence that other bears are scalping, unwilling to hold, unwilling to sell more as it goes down. Bad for stop entry traders. Big bars, so big risk. A lot of overlap, so trading range behavior, limit order market. Traders selling as it goes up, buying as it goes down. The exact opposite of what stop order traders want to see. So better to wait. Inside bar, so a low on sell signal, but a bull body and a limit order market. So low probability sell. And 4 bars in a tight range. Bad for stop entries, selling below or buying above. Limit order bulls buying 4 low, buying 3 low, but it has to get above that 4 low for them to make money. Otherwise, the bulls will be trapped and they'll have to sell, and we could get a breakout and then a test down to the 51 low. Still always in short, but not especially strong selling. We have one big bear bar closing on its low. We have a 5 bar bear micro channel, and therefore most bulls will want the second buy signal. That means we're probably going at least a little bit more down. Nobody's going to buy above 6. The bulls first have to stop the selling. Yesterday, the bulls had, in the first 6 bars, 3 bull bars. And the bodies are bigger than what we've had today. We've had 2 bull bars here, but 1 is small. And even with the good bull bar 6, the first reversal up was minor. The bulls needed a double bottom. So today is not as bullish as yesterday. Odds are, if we reverse up above 6, same thing as yesterday, first reversal up minor. Magnet 51 low. Any reversal can be the low of the day, but 6 bar bear micro channel, and no particularly strong bull bar yet today. I think it's better to wait for a second buy signal, either a double bottom or 3 consecutive bull bars or 1 huge bull bar. Similar to yesterday, bar 6, potentially a bull reversal, possibly low of the day. Bulls have a higher low, but with 6 bull bars, usually better to wait for more information, either a double bottom or 2 or 3 bull bars. If you take the buy, the odds are high that you'll make money, but just making money 60% of the time is not a reason to take a trade, because you have to also consider how far your stop is and how much you lose on the 40% of the time that you have losers. And that 40% losing can more than offset 60% win. Consecutive bull bars, probably not yet, always in long. Tail on top of 6, 5 bar tight trading range, just below the moving average. Can you sell below 7, double top on 1? I would not. Probably buyers below 7, and the limit order bears who sold the 5 high and who sold the 6 high probably will make money. So no rush to do anything. Remember, I said bears want the market to get closer to the moving average before they'll sell. And I said we could get to the moving average either by rallying or by going sideways. And we got there by going sideways. However, there's no good reason to sell yet. There's also not a particularly strong reason to buy yet. 3 bull bars. In a way, it's similar to yesterday. Sell off and rally. Sell off and rally. Probably always in long if we close near the high of the bar. But we're right at resistance, 66 low, and the moving average. So not high enough probability for a scalp buy. Plus, we still might test that 5 high, like yesterday. 6 bar bear micro channel. Typically sellers above, and typically the first rally will be minor, and we have to come back there. This is looking good for the bulls, especially if 8 can close on its high. 60-minute moving, 60-minute chart. Bought the moving average. Bought the moving average. and they're buying the moving average again, still in a bull trend with no credible top. Important bar, if it closes on its high, that would increase the chances that we've begun to swing up. If it has a conspicuous tail, a 3 or 4 tick tail, that would increase the chances that we're going to go sideways more. Always in long, but stop for the bulls is all the way down below 6. With the 3 bull bars, 2 of them pretty good bull bars, odds are buyers below 9. The bears double top 1 at the moving average. But right now, at least slightly more likely, we've begun to swing up. I say slightly because look where we are. In the past 60 bars sideways, right? We're right in the middle of it. So it's not as bullish as it could be. For the bears, double top bear flag at the moving average. But big enough bull bars compared to the bear bars, and 3 of them make it more likely buyers below 9. So for the bears, it's a swing short, double top bear flag. They hope this is a bear trend and that we have a double top, but they should not have allowed the 3 bull bars, especially 2 of them with decent bodies and closes near their highs. You can see it's not all that bullish, right? We got to the moving average, and bears sold the moving average. They sold the test of the December 10th low. What do the bulls do with bar 9? Let's say it closes below its midpoint. I think it would be good for the bulls to get out below 9. And for the bears, I think we just became always in long. I would wait for a second sell signal and not sell below 9. This might be simply a test of the 5 high, where the limit order bears probably sold. Still confusing, not a sense that the price is terribly wrong and that we have to go quickly to a better price. Slightly more bullish than bearish with the 3 bull bars. Getting near the end of the first hour, and so far a doji in the middle of a tight range. So not a strong buy setup. Also will try to prevent the sell from triggering, so they do not want 10 to go below 9. All right. Okay, so now the double top triggered. That's a swing sell. I would not take it. I think even with 9 closing on its low like that, I think probably buyers not far below, maybe down to the 5 high. Still not all that clear. When things are not clear, it's usually better to wait for a very clear breakout or for a second signal, a micro double top or a micro double bottom. You'll have bears buying here at the 5 high. They sold the 5 high. We were surprised by the 3 bar rally and are trying to buy back their shorts, break even at the 5 high. And a lot of those bears sold more higher and they'll scalp out with a profit. And for the bulls, 10 is a high 1 bull flag. They're hoping that we've begun a bull trend, similar to yesterday, bar 10. Yesterday we rallied for 4 bars, sold off, and get a reversal bar. Here we rallied for 3 bars, sold off, and bulls trying to get a credible buy signal bar. If it's not a pretty good bull bar, most bulls are not going to buy above 10. They'll wait. And for the bears, I'm flat right now. I would not sell below 9, but let's say we get 3 consecutive bear bars. Is it always in short? Not necessarily. It depends on how big they are and whether or not we fall below 6. For the bulls, a high 1, a breakout test of the 5 high, and did not fall below the 5 high, so you have trapped bears, and they may be forced to buy back their shorts. High 1, but not a strong buy signal bar, so not good enough for scalp. It's still in the buy above 6, stop below 6. However, it's still not all that clear. The bears have a credible double top with bar 1 and a decent sell signal bar 9. Best choice flat. It's slightly more bullish than bearish, so the trader could be still swinging along, and the bears have a double top bear flag at the moving average with a decent sell signal bar. They could be selling. To me, I think it's too neutral. If you had to be in the market, I think long has a better chance of making money than short. You can see the 60-minute chart so far, perfect doji. We're hanging out around the open of the hour. Market's deciding, is it going to be a doji bar? Is it going to be a bull bar closing on its high? Less likely, is it going to be a bear bar closing on its low? Always in long, so it's a swing by above 10, a high 1, a micro double bottom. And for the bears who sold below 9, it's a swing, so they still have a stop above 9. Best choice right here. Wait for more information. Might get a wedge rally, 1 sell-off, 2 sell-offs, maybe 3 sell-offs. Bears are trying to get a gap down double top. Gap down double top. More often it comes around the moving average. Despite a lot of bull bars, you can call this a wedge, you can call it a double top. Rally, second rally. Sold off, rally. 3 bull bars. Bulls trying to get a reversal like today, yet the bears got a bear breakout bar and a follow through bar and then a swing down. Double top 1, 9, neckline 6 low, but trading range, and therefore not a lot of bears are going to sell on a stop 1 tick below 6. Theoretically, there'll be bulls giving up below 6, but I think a lot of the bulls got out below 9 because of a big bear bar at the moving average and a possible double top 1. And most bears did not sell below 9. Still confusing, still probably 50% chance we'll go below 6 and start a swing down, 50% chance we'll get a double bottom. Breakout mode, double top and double bottom, and then the market decides on the direction of the breakout. Remember, at the close of bar 1, I said it probably was not going to be either the high or low of the day, a doji bar in the middle of a trading range. Low probability bet that it would be either the high or low. Getting near the end of the first hour, and the bears are hoping this is a wedge, 1, 2, 3, and that this is going to be a good entry bar. They obviously want it to be as big as possible. It's probably not going to be very big. We only have a minute left. And they'd also like to close below the 60-minute moving average. Bulls want double bottom 6, and bears want the breakout to a new low of the day. Bears, it's on the sell below 9. Bulls, it's on the buy above 6. The bulls will give up below 6. The bears will give up above 9. However, if 13 is a pretty good bull bar, it'll be a credible buy for a double bottom, and the bears will give up above 13, just like most of the bulls gave up below 9. The bigger bar 13 is, the more likely it'll be the start of a swing up. So the bulls want to close on its high and have a decent sized bull body. And the bears obviously want it to be a bear bar, and they want it to close below 6. Most bulls want 13 to be very strong before buying. If it has a 3 or 4 tick tail, most bulls will wait. Swing buy for the bulls, they want the double top. The bears are hoping 14 is a pullback in what they want to be a bear trend. You have limit order bulls who bought the 10 low or 11 low, and they need to get above those lows to make money. They buy the 10 low, they buy more, 2 points, 4 points lower. Bulls are hoping this is similar to yesterday, a double bottom bull trend, double bottom at the 60-minute moving average bull trend. Nine ticks up and a pause. A lot of bulls, until the day is clearly in a bull trend, scalp part or all at 2 points. So you have a lot of bulls with limit orders to sell exactly right here, 9 ticks above 13. For the bears, 14 is a test of their entry below 9, and they need to get a pretty good bear bar. Just the size of the reversal up from the 13 low is enough, I think, to discourage bears from selling below 14. It's still not clear, right? The bears and bulls both still have credible arguments, so we still need more. For the bears, a pullback and a bear trend, and for the bulls, a entry bar for a double bottom at the 60-minute moving average. I still think we need 1 or 2 more bars up or down to make this clear. It's okay to be swinging along, and theoretically it's okay to be swinging a short, but I think a lot of the bears would get out above 13. Probably more buyers than sellers below 14. A decent double bottom with 2 decent buy signal bars, 6 and 13. A weak entry bar. So a lot of the bulls, disappointed by the close of 14, got out around the close of 14. And for the bears, I think they want to sell below a bear bar closing on its low, not below a bull bar. So probably more buyers than sellers, 14 low. Outside up, good for the bulls, but they want it to close on the high of the bar and preferably over the moving average as well. That would increase the chances that we'll go above the high of the day. I don't know if we'll get a measured move up, but that would be a target. Takes us up to around yesterday's high. We're still in the trading range, so the bulls still need to do more. I did buy the 13 high, and I'm still long, taking a chance that we get the breakout. I don't want it to come back down to that 13 high again. If it does, I'll probably get out. 3 consecutive bull bars, outside up, close above 14, good, but no close above the moving average yet today, so bad for the bulls. They need to get a bar closing far above the moving average. Otherwise, the bears can still argue we're on the double top, 1 and 9. As I said, most bears are out above the 13 high. However, if we get a bear inside bar here, you'll get bears selling below 16, betting that we're in a bear channel, failing at the moving average. In a bear trend, you keep getting reversals, and even good bull bars, traders are selling them at the moving average. Early on, it does not look like much of a bear trend, but it can go on all day. Same thing, strong reversal, and the bears keep selling the moving average. Keep trying to reverse, but when it gets to the moving average, the bears overwhelm the bulls. And that's what we do not yet know. Are we in the early stages of a bear trend? Technically, we are in a bear trend and a bull trend. We have a lower high bear trend, a higher low bull trend. And I say that because what happens if we go up here? You'll say the bull trend began here, so this is part of the bull trend. On the other hand, let's say we go down here. You'll say the bear trend began here, so this is a pullback in a bear trend. When the market's in a trading range, it usually is also in a bull trend and a bear trend, and there's usually a credible sell setup and a credible buy setup. Still have a minute left to the bar. Bears want a bar closing on its low, like bar 9, and swing bears will sell below, betting that this is an early bear trend, and the bulls really need to get a big bull bar closing far above the moving average. Part of the problem for trend traders is traders are scalping. They sold below 2, they sold below 9, they bought above 6, they bought above 13, and they're scalping, 2, 3, 4 points. They do not have a lot of belief yet that this is the start of a trend, and they feel like until it's clearly trending, they'll make more money by scalping repeatedly. A lot of traders do both. They scalp part and hold part, and when they get their scalp, they get out, break even on the other part, and they hold that other part hoping for a trend. Not a good bar for the bulls, not a good bar for the bears, so it's still unclear. Not a good sell signal bar, and still not getting closes above the moving average, so not good for the bulls either. Still slightly more bullish than bearish, I think. 3 decent bull bars here, 3 decent bull bars here. And the bears do not have consecutive bear bars. They have 2 bars here, but one's a doji, 2 bars here, one's a doji. 15 is actually an interesting bar. We broke above 13, and 15 tested below the entry price above 13. And typically, if this is going to be a bull trend, the bulls will not allow the market to dip below that 15 low. 15 low is a test of the 13 high, and they will not let a second test fall below the bottom of the first test. So you have a lot of bulls buying at the 15 low and just above. If it falls below that 15 low, that would probably shift the probabilities in favor of a bear breakout below the low of the day. Right now, it's still slightly more likely that we're going to get the bull breakout. Breakout test. Breakout test. A second breakout test. It did not fall below the first one. If it did fall below the first, the bears would probably take control. The bears had two very big bear bars here. They could not fall below the first breakout test. Breakout test, a second one. The bulls refused to let it fall below the first, and we got the reversal up. And that's similar to this. The bulls so far preventing the market from falling below the 15 low, which is a test. Bulls trying to get their breakout and a swing up. New high of the day, good, but they need more than that. They need big bull bars closing on their highs. Otherwise, the bears will have a wedge, 1, 2, 3. The bigger this bar is, the more it closes on its high, the more likely we're going to get up to yesterday's close. So the bulls need either a very big bull bar or consecutive decent bull bars. The bears are trying to get a wedge, bear flag, 1, 2, 3. The wedge bear flags never look like wedges until after they reverse down. So you're always going to be thinking about what's possible here. We're trying to get a breakout, but if the bulls do not do what they need, traders will sell the reversal down. We might get a buy the close rally, right? Some bulls will buy above 18, others will wait for one more bar to confirm the breakout, and bears want another bar like 2, like 9. Market's deciding, will the breakout succeed or is it going to reverse? I think you cannot assume it's going to be a strong trend, right? The past few days, past 7 or 8 days, we've had lots of trading range trading. And therefore, if you get a trend, it may not be all that strong. You know, yesterday here we were trending up, but look what took place in the trend, very deep reversals. Here we were trending up, but not very strongly. So I think the odds are against a trend day, right? The bulls are trying to get a swing up here, but I think we'll have a hard time getting much above yesterday's high. Past 3 days sideways, plus we're way overbought. The close of the bar is important, right? The more it closes on its high, the more likely we're going to go higher. So that's a good bar for the bulls. They need one more bar here. If they get it, then we'll probably go up for some kind of a measured move. 16 ticks above 17, 90% chance we'll go at least one more tick. You'll have 4-point bulls trying to scalp out part at 4 points. Sometimes they'll be concerned and scalp out 1 tick less. So if you get 16 ticks, 90% of the time you're going to get 17 or 18 ticks. For the bears, they're trying to get a wedge, failed breakout. You can see not a lot of traders willing to hold on to positions. 3 rallies, very, very strong after a gap down. Yet, despite 4 bull bars, we broke to the downside for a measured move down. Very strong rally on the open after a gap down. We got a swing down. Very strong reversal, and then a wedge top and a swing down. wedge, wedge in the open, wedge, gap down, parabolic wedge, gap down, wedge, wedge. Here, a couple pushes above the moving average. Did not matter. We still reversed down. Close above the moving average. I would not call this an opening reversal. It's too late in the day. After 90 minutes or so, if you get a reversal, I think of it more as a reversal day rather than an opening reversal. This is an opening reversal. Wedge, again, reversal day, not opening reversal. This is kind of like today. Possible wedge. This is the one that has the most potential for today, right? If the bears get 19 closing on its low, I think the bulls will get out. If 19 has even a 2 or 3 tick bear body, I think most bulls will get out because they're concerned about a possible wedge, lower high. We call it a head and shoulders top, left shoulder, head, right shoulder. Three-day trading range. Traders expect reversals. We have a lot of room to the top of the range. Right now, it's more likely that we're going to go up more, but you got to be open to a reversal coming at any time. Swing bears, if it closes like this, it's a reasonable swing sell. Higher probability, wait to see 2 or 3 consecutive bear bars. However, so far, this is not behaving all that well for the bulls. Not a particularly good sell, but I think a lot of the bulls will get out below 19. They don't have to. They could keep a stop below 17. But this is not looking all that good. Where are the consecutive big bull bars closing on their highs? Still not clear. And, it's a trading range day. A lot of times it stays unclear all day. Limit order bears made money selling above 1. And despite the breakout 18, they sold the 9 high. And bulls scalped out. I still think we're always in long, and I still think probably more buyers than sellers below 19. The bears were unable to get a very good sell signal bar. And we went 6 ticks, 16 ticks above 17, and 90% chance if you go 16 ticks, you'll go up 17 or 18 ticks or more. Bar 18, we just broke above the 18 bar range. If you get a failed breakout of the 18 bar range, it usually occurs within a bar or 2 or 3 after the breakout. The bears are hoping that this is a failed breakout of the 18 bar range and the start of a bear trend that will take us below the low of the day. It's still slightly more bullish than bearish. For the bulls, a high one, a pullback from the breakout, and a breakout test 17 high, and always in long. Is it high enough probability for a scalp above 20? I don't know, but it's still always in long, so it's an okay swing. Most bears, I think, would not sell below 19, so I think most individual traders who want to sell right now are kind of stuck. Reversals every few bars, so very difficult for swing traders. Typically in stuff like this, I did buy above 17. I scalped part, got the bear bar. 19, I got out below the bear bar, and I did not short. Had 19 closed on its low, I would have considered shorting, except I don't like to reverse. So if I'm getting out of a long, I probably would not have sold below 19. I would have waited. And here the bears are telling us we have a wedge, lower high, major trend reversal, but not a good sell signal bar 19, not a good entry bar 20. the bears then are left selling below 21 in the middle of a trading range day. So not very good, not a very good setup. So I'm trapped out right now. Still in a bullish channel, and we have a double bottom 15, 17, and a pullback 21. But the bear bar 19, and then the bigger bear bar 21, and the close back below the moving average. Most bulls are not going to be eager to buy above 22, and for the bears, they do not have a very good looking sell. So to me, the picture is confusing, and that means probabilities are about 50-50 bulls and bears. And I think it's very difficult to structure a trade. The rewards are small. We're not going very far. We're reversing every 2 or 3 bars. So you get small reward, risk relatively big, and probability low. So for stop order traders, so it's a limit order market. Buying below everything, selling above everything, and taking quick profits. Swing bulls is still always in long. It's still a bull channel, so it's a high 1 or a high 2 above 22. 2 legs down, 19, 21. You can call it a high 2. Market double bottom, 20, 21. You can call it a high 2, but it's a 4-bar bear micro channel, so you can also call it a high 1. On a smaller time frame chart, it's probably clearly a high 2. Leg 1, pullback, leg 2. Let me take a look at the 1-minute chart. So high 1, high 2. Doesn't matter, it's a bull flag, but the math I think is very difficult for stop entry traders. Another close above the moving average, but 21 I think makes a lot of bulls afraid. It's a swing buy above 22, higher probability. Wait for another bar or two and see what we get. Will we break strongly to the upside, then possibly buy higher? Will we go sideways for 3 or 4 bars and get a small double bottom? That would be a buy. And for the bears, not a good sell signal bar, 19. 21 big bear bar closed below its midpoint, but not on its low. And 22 did not go below 21, so it did not trigger the sell. Yesterday, bar 43, the bears broke below it and we collapsed. Here, the bears were unable to break below 21. So it's still slightly more bullish, but for stop order traders, I think the math is too bad. It's better to wait. Even though always in long and a high 1 or micro double bottom at the moving average, not a lot of traders are willing to take the buy. They'll wait for a second buy signal or for a strong bull breakout. And for the bears, I do not think there's a good enough reason to be short. A lower high major trend reversal, a wedge lower high, but a weak sell signal bar, 19. The end of the second hour, and just another bar in a 15-bar tight trading range. Bulls holding above the moving average, but we're not rallying very much. Overbought, so probably a pullback soon, but no clear top yet and no strong reversal down yet. And then on the daily chart, we still have magnets above. Monthly chart, that November low is the magnet. Here's the monthly chart. Here's November. It's a bad looking sell signal bar. The bears have a reversal, and then the bulls have a bull doji at the moving average. Bull bar, low probability. Tail below, low probability. Above the moving average, low probability. So you have limit order bulls who bought that November low, and they bought more lower, like around the trend line, expecting the market to come back to that November low. High 2, but bear bar. Always in long, good for the bulls, but I think the math is just pretty bad here. Remember, still should go above that 19 high, because that 19 high is 16 ticks above 17, and 90% chance you're going to get at least a 17 ticks. But I think this is really not, at the moment at least, a very good stop entry environment. Tight trading range. Will the bear sell below 26? Most traders are not willing to do much right now. Limit order traders are trading. The bears, if they are looking to sell below 26, they would like it to close on its low, and they would like to close at or below the moving average, which is not likely. I think better to be flat. I think we're always in long, but this looks like more of a limit order market, so most traders are better off just waiting. The bulls who bought above 22 have not been able to make 1 point yet, 5 bars later. 5 tick trap twice, 26, 27. Still breakout mode. When you have these trading range days that last a long time like this, and then you get the breakout usually just lasts a few bars, and then you enter another trading range. So it's a setup for a trending trading range day. So for example, trading range, breakout for a few bars, and then it enters another trading range. Trading range, breakout for a few bars, trading range. And it could go down as well. So trading range, breakout, trading range. Trading range, breakout, trading range. Trading range, breakout, just a couple of bars, and then another trading range. I personally don't like this type of trading because I prefer stop orders, and it's a limit order day. I do take some limit order trades, but in terms of my own happiness, I'm happier with stop orders. The bulls 22 disappointed 23, 24. A lot decided to try to get out with 1 point, and they finally got 6 ticks. So that tail on the top of 27, in part, disappointed bulls scalping out with 1 point. I still think it looks more bullish than bearish. We've been trending up since bar 6, and we have a higher low, higher lows, higher highs. So it's a bull channel, but not all that strong yet. Bulls trying to get the breakout, and then next target, yesterday's close, maybe yesterday's high. Trying to get a by the close type rally here. I bought above the 27 high. I scalped out part at 1 point, and I'll get off the rest pretty quickly if it starts to stall. They're still trying to get a wedge. We have a series of highs. We're at the top of a channel, and the bulls are hoping for a breakout and a measured move up. The bull case is better, higher probability. Trying to be by the close. Bulls want bars closing at or near their highs. It would be better for the bulls if this trading range did not get these higher highs, because this creates a wedge bull channel. It would be better if it was sideways and then a breakout instead of tilted up. Tilted up makes it possibly a bull channel bear flag. Right now we have a gap, and we have a double bottom here, neckline here, measure move up, so double bottom pullback, that's a buy. and we're in the breakout phase right now. Double bottom and then a pullback to a slightly higher low. The bull's got a trend out of it. Sometimes the double bottom pullbacks are small patterns, sometimes they're big. Double bottom, breakout, pullback. Double bottom, breakout, pullback. Small double bottom, breakout, pullback. And we get a rally from it. Double bottom, breakout, pullback. And then we got resumption of the bull trend. Similar to today, double bottom, breakout, pullback. And the bull's got a resumption of the bull trend. So double bottom, breakout, pullback, and bulls are hoping to have the breakout go up at least a little bit higher. For the bears, 27.28, strong enough, probably at least a small second leg up. So even though top of a channel, I would wait for a second sell signal and not sell below 29. Different ways to draw it. You can draw it that way, or you can draw it this way. I would get out of longs. I had another stop order to buy above 28, did not get filled, obviously. I would not short, even though it's a credible wedge. It's still a possible wedge, lower high, major trend reversal. Head and shoulder stop. Left shoulder, head, right shoulder. So bull trend, bear breakout, wedge, lower high. But pretty tight bull channel and consecutive good bull bars. I would wait for a second sell signal and not sell below 29. With that bear bar, I'm going to go ahead and cancel my order to buy above 28. Still channeling up, still always in long. Probably buyers below 29, but because of the wedge and the bear bar closing on its low, I did not sell. Does this look like a bull trend that will last all day, or does it look more like a bull leg and what will end up as a trading range day? I think it's probably going to be a trading range day. The bulls are hoping 27.28 is a gap, measuring gap, and 30 is a test of the breakout point, the 19 high. So for the bulls, this is what they're hoping, that we're getting a breakout, and that this is testing the breakout point, and it will be a high one buy signal bar, and that will continue up for the measured move. These repeated bear bars coming all day long, decent sized bodies closing on their lows, make this more likely a bull leg in a trading range day than a bull trend. So we're probably going to get a reversal at some point today. A lot of times it comes in the middle of the day, 9:30, 10:30. So the bulls on another high one, but a lot of bear bars. It makes a lot of bulls hesitant to buy. I wanted to buy above 28, but not after I saw 29. So right now I'm going to wait, even though it's a high one above 29 or a high one above 30. Still channeling up. I think it's difficult to do anything. Not a good sell for the wedge. Still always in long, but not strongly bullish. I did not take the high one buy, although you could take it. I don't like the way this is having so many big bear bars after attempts by the bulls to break out. Too many big bear bars for me to be buying at the high. We got a breakout 27.28. Second leg up, likely 31. We could get a third or fourth or fifth leg up as well, but the minimum was a second leg up, and this met the minimum. That will make bears more willing to sell below 32 if it closes on or near its low. Sellers making money above things all day, selling above 1, above 9, above 19, above 29. All right, so limit order bears have been making money, and now the stop order bears have a setup for a swing down. We've had so much trading range trading today that we may go sideways here for a number of bars. If we go above 32, well, probably sellers above. The bears have been selling above bars, above prior highs all day long. If this is the start of a swing down, it'll probably last at least an hour, maybe more. Obvious target would be a major higher low like 21. And then we've been oscillating around that December low for several days. And so that's obviously an important price. You can see we just keep going above it, below it, above it, below it, or above it, and might get down to it. For the bulls, double bottom 30, but I would not take the buy. I would wait for a second buy signal. Swing bears still on their short. Some will put their stop above 32. Others will sell more above 32, betting that if we get above 32, we'll get a reversal down like we've been getting all day today. Bulls, I would be out of longs below 32, and I would wait for a second buy signal. And for the bears, it's an okay swing short. Fairly tight channel. We may have to go sideways for 5 or more bars before the bears get a breakout down to the 21 low. If we're going down there, we don't know. We're still channeling up. Bears trying to get a second sell signal below 34. If 34 closes right here around its low, that would be a decent sell. It's still on the sell below 32, and the bulls either need a strong breakout above 32 or a micro double bottom. Not a good sell signal bar, 34. Increases the chances that we're going to enter a tight trading range. When things are unclear, the market often goes sideways. Now, the bears have sold below 32 have a chance to get out break even if they're sufficiently disappointed, 33, 34. I think it's an okay swing. Obviously higher probability to wait for a bear breakout. I said a lot of the bulls would not buy above 33, but they would consider buying above a high 2, and they're trying to create a credible high 2 with 35. I'm not sure that it's worth taking the buy. We're still on a reasonable sell below 32. Might be in a tight trading range. I did sell below 32, and I just got out break even a couple of minutes ago. and I'm not buying above 35. I think it's more likely that we've begun a swing down. We may have to go sideways for several bars before we actually turn down. The bears need a second good sell signal bar or a pretty strong bear breakout. And the bulls, same thing. They need a second. They need a good buy signal bar, which they do not have, or a strong bull breakout, which is unlikely. We're channeling up. We still have a gap here, but I think the odds are the gap is going to close and that we'll get a measured move down. Right now it's a body gap. The bodies are not overlapping. So here's the highest body in the breakout point. And as long as these bodies stay above that red line, the bulls still have a trend. But if we get a body that closes below that red line, then we'll have overlap, and that typically signals the end of the bull trend and the conversion either into a bear swing or into a trading range. I think it's going to happen. This is not having much follow through buying after the 27-28 breakout, and we've had a lot of bear bars today, so I think we're going to get a swing down. Plus, we know the December 10th low has been a magnet for several days, and it's below. What happens if we keep going up? Well, I'll keep looking for buys, but right now I'm flat and I'm looking for sells. It's on the sell 32, but I'm going to wait for a second sell setup. Trading range here, tight range here, tight range here. Lots of limit order trading. Far easier to make money today with limit orders, selling above things, buying below things, and scalping. Whenever there's a credible top like 32, there'll be stops above it, a lot of stops above it. Bears exiting, bulls buying. My general rule is if you have an obvious stop location, like one tick above 32, and the stop gets hit, 50% chance you get a swing up, 50% chance you get a reversal. In this particular case, I always adjust the percentages depending on context. Today, the rally is weak and the bears have been making money all day. And therefore, I think if we go above 32, it's better than a 50% chance we'll reverse back down again. Less than a 50% chance we'll get a breakout and a big trend up. I do not have an order to sell above 32. When I shorted below 32 and saw a 33, I placed an order to sell more above 32. But now that we're not going down, it's less bearish, and therefore I'm going to wait. I canceled my sell order for the 32 high, and I get out of my short during 35. So right now I'm flat, and I want to see what we get here, a breakout or a reversal. Testing yesterday's close. So we're back to unchanged on the day. 35 was a high 2 at the moving average in a bull trend, but because of the 3 dojis, I did not buy above 35. So right now I'm trapped out. Limit order bears selling 32 high and selling more 1 point higher, 2 points higher. We'll probably make money. Bulls are hoping this is a small pullback bull trend and it continues up all day. I still think it's not going to last. However, I'm not expecting a big move down. It may simply go sideways. Still channeling up, and I'm currently flat. Remember I said on the open that Today we'll try to test either yesterday's high or yesterday's low and reverse. And we've been working up here now for 3 hours, testing yesterday's high. Might be getting stronger. We've been 6 bars without a bare body, first time all day. So the bulls are trying to break above yesterday's high. Because yesterday was a small outside day, we probably will have a hard time breaking much above yesterday's high if we do break above yesterday's high. We have a potential gap here. We have a double bottom here. And then we have a potential measured move here, breakout point, pullback. But unfortunately for me, I'm flat, and this is not strong enough for me to be buying at the high. Whenever the market breaks above a credible top, and you do not get the immediate reversal, you always have to think that it probably will go up for at least a couple legs, because you'll have trapped traders. You'll have trapped bulls who did not buy the breakout, and they'll look to buy a pullback. And you'll have trapped bears who are looking for any kind of pullback to buy back their shorts with a smaller loss. So I'm not going to sell below 39, and I don't want to buy at the high. So right now I'm trapped out. And all the way up, the buys were not all that great. We had a breakout pullback 17, again 22, tight trading range, a high one 29, but after a bear bar, and then a high 2 here, but 3 dojis after a credible top. So not very good stop entry trading today. I'm trapped out. One of these reversals, I think, is going to lead to at least a couple legs down, and this could be it. But with 7 bars without a bare body, I'm not willing to take that short. The math has to make sense, and you can argue it's a sell climax and therefore a sell, but I think the probability is not good enough. Excuse me, a buy climax and therefore a sell, but I think the probability is just not good enough. Some bulls will say that we got a second spike here, so you start the count over again. Not good enough to sell below 40. And for the bulls, stop order bears made money, which is the first time since bar 19. So that could be a change in the market. Sometimes you get a buy climax that does not look like a buy climax. And this could be one. 4 consecutive bull bars and 7 bars without a bare body. Test of yesterday's close, test of yesterday's high. But very tight bull channel. I don't want to be selling below a bull bar. And I'm not going to sell below 41. So right now I'm trapped out. And for the bulls, a lot of bulls will get out 1 tick below a bear bar, like 32. And also 4 ticks or so below any bar, like 39. If they're trading always in, they have to buy again above a bull bar. For the bulls who get out below 32, not a very good high 2 above 35. So theoretically, they buy above 35 or above 37, and I did not do either. And I would not buy above 40. So right now I'm flat, waiting for setups that have higher probability. Limit order traders, they made money selling above 2, selling above 32, selling 1 or 2 or 3 points higher. And that's been the case all day. Limit order traders have been selling every new high. Limit order bears, limit order bulls have been buying the low of the prior bar, even below bear bars like 29 and 32. So bulls bought the 39 low, scaled in lower. expecting to get a profit. They expected to get at least one tick above the 39 low. We're getting gaps and body gaps. Let me move this up here. So now the breakout point is this high. Here's the breakout. Here's the pullback. And so far, no overlap of the bodies. And if we get a body here that overlaps a body here, in other words, a close below that red line, that would be a sign that the rally has ended and that we're converting into a trading range or a bear swing, which I still think we're going to do. But, bulls are continuing to buy. I'm trapped out right now. We know bears will sell at a new high. They've been doing that all day. At some point, they'll start selling above bull flags. Here we have a high one bull flag and bar 41. However, it has a bull body, so not a very good one to sell. But that's one of the signs that a bull trend is evolving into a trading range. If you start to get lower highs, bulls selling above, bears selling above bull flags. Like here, 22, bears who sold above 22 made money. Bears who sold above 33 made money. And bears selling above 41, I suspect they'll make money because bears have been making money all day long with limit orders. And they'll sell above 41 and they'll sell above 38. You can see it fell 5 ticks, and therefore the bears who sold that 42 high made money. So bull trend, but bears have been making money repeatedly with limit orders. Bulls have been making money with limit orders and with stop orders. But the stop orders for me are not quite good enough. Bears trying to get a second sell signal, but it's still not all that good. The moving average is support, just a little bit below, and the bears were unable to get a good sell signal bar 39. Important what goes on here, right? Can 43 close below the red line? That would be a pretty good sign that the bull trend is ending and that we're converting into a trading range or possibly a bear swing. I did short this as it was falling. Trend, but then we got to close below the breakout point body, so no longer a body gap. Usually the trend ends or it will end soon and convert into a trading range or a bear trend. Trend, and then tail, but then we finally get closes below the red line and it's the end of the trend. Trend, like today, a channel. And once you get a close below the top of the body of the breakout point, you have a chance of a swing down, but typically it represents the end of the trend. Here's the highest body in the breakout point. We broke above it. And then once you get a close below the breakout point, typically the trend ends or it's going to end soon. Same thing. We broke above this high. We have a body gap, but then we have a close below the top of the highest body here. The body gap closed and we ended up sideways to down. For the bulls, a high 2. However, even if we go up, I think bears will be more willing to sell, like above the high of the day, even above 44. The bulls are trying to get a high 2 buy, but because the body gap closed, I'm not going to take that buy. I think we've probably begun a sideways to down move. Is it always in short yet? Well, that's an interesting question. This is very good for the bears, but sometimes you get one more new high before the bull trend ends, and it would be better for the bears if they get a second consecutive bear bar. For the bulls, I would wait for a third entry buy. So 1, 2, 3. So I'd wait for a third buy signal. I would start looking. To me, 43 is the surprise bar down. So from 43 onward, I would look for a second buy signal. And we have not had a first buy signal yet. Closing the body gap, probably end of bull trend and trading range or bear trend likely. For the bears, surprise bar down. 44 is a low one sell signal, but it's a doji bar at the moving average just above the bottom of this trading range. So not a great sell unless you're putting a stop up here or here. And for the bulls, it's a high 2 bull flag. They're hoping this is just a bear trap, trapping bears into believing we've started a swing down. However, a doji buy signal bar 44, surprise bar down, the closure of the gap, odds are there'll either be sellers not far above 44 or sellers above the high of the day. As I said, sometimes you get one more new high and then the bull trend ends. Obvious magnet, that December 10th low, we've been oscillating around it. Daily chart, here's that December 10th low. And for the past 3 days, we've been going up and down around it. Back to the middle of the day, bulls are hoping it's like yesterday, rally, strong sell-off to around bar 50, and then second leg up. They're hoping this is a smaller version of the same thing. Right now, we've probably seen the high of the day, and we've probably seen the low of the day. Remember, I said today had a good chance of being an inside day, staying below yesterday's high and above yesterday's low. Probably always in short, but middle of a trading range day, right above support, probably better to sell a bounce. For the bulls, a wedge, bull flag. 1, pull back, 2, pause, 3. But tight bear channel, I would not buy unless we go sideways for a few bars and stop going down. Probably not great sell to close. We're right above the target. And we may come down to the 21 low. So it's trading range day. So you got limit order bulls buying 44 low, 43 low, and they should make money. Also buying 35 low. Stock order bulls for the wedge test of the support areas. I think it's less certain. You know, if you buy, use a wide stop and are willing to scale in, it's probably okay. But if it has a 3-tick tail on top, I would not buy with a stop. I would only be buying with limit orders below things and scaling in. Trading range day, so the open is always a magnet. The day might close around the open. Probably most bears will scalp a lot. We have a gap 43. Takes us down to around the open. Trading range day, you have to assume the open is always a magnet. Stop order bulls, you can argue wedge 1, 2, 3, or 4, 1, 2, 3, 4, but pretty tight channel. Bulls probably buying below things. They may have bought below 43, below 46 at the blue line. Stop order bulls, pretty tight channel, 6 bar or 7 bar bear micro channel. So I think a lot of the stop order bulls will wait for a second buy signal, micro double bottom. Bar 48, multiple of 12, so it's the end of the hour, and the hour is outside down. However, in a trading range like this, about 15, 20 bars. Outside down is not all that important, just like outside up here. I said the other day, probably not all that important. Here, this was outside, consecutive outside bars. Back above 45 low, 46 low, scale and bulls made money. They can either buy the 46 low and 1 point lower, or simply buy 1 point lower. Stop order bulls, I'm not willing to take the stop order buy. Very good bar for the bulls. You can argue wedge. It's similar to bar 13, pretty tight bear channel and a good bull bar. I've been conditioned into limit order trading, selling and buying today, and therefore I'm going to let this go and not take the stop order buy. Very tight bear channel. I'll wait to see if we get a micro double bottom before taking a stop order buy. Would I sell 48 high? No, but I have been buying below bars, below 46, for example. I did sell. I know I sold 43. I may have sold 45 as well. I don't remember. Always in short, but trading range day. We may bounce up here. That was the breakout point. We have another breakout point below 43. The limit order bulls, 44, probably will make money. So we'll probably get a bounce at some point over the next 5 or 10 bars back above that 44 low. It's a limit order day. For the bears, double top bear flag 26, low 149, but 3 decent bull bars, 46, 48, and 49. Probably buyers below 49 and below 48. The issue that I have, the reason I did not buy 49, it's a trading range day, and the market usually likes to test the open, and I'm not sure that we got close enough for traders to feel that the open was adequately tested. But probably buyers below 49, buyers below 48. Bulls trying to get outside up, like 6, like 15, like 17, like 27. Can we get to the high of the day? It's possible, but I think we'll probably stall around that red line. It's a breakout point for the bulls, and then the bears broke below it. Limit order traders, they bought the 49 low. The bears will sell higher. Remember, I said there are limit order bulls above that 44 low. Because it's a trading range day, they probably will make money. So we're probably going up. We're probably going up to that 44 low. Stop order bears want a low 2. So low 1 sideways and then low 2. And then they'll try to get down to the open, maybe to the 60-minute moving average. Should get some profit taking here from limit order bulls who bought that 44 low. And a sign of that would be a tail on top of 51. Are we back to always in long? Not yet, but if 51 closes on its high, especially if it gets bigger, it'll probably flip the market to always in long. But the selling was strong enough so that we have big up, big down, big confusion. This is probably a minor reversal, and we're probably in a trading range. To double top bear flag 46, you can call it a failed breakout above the double top 46, 49, so you can call it a wedge bear flag, but 4 consecutive bull bars and in a support zone and a limit order market. Not all the bears are going to be eager to sell below 52. Bulls trying to repeat this, create buy setups that just don't look quite right. I think most bulls are not going to buy above 53. It's more of a limit order market. You can see they bought below 49, they bought below 52, and bears sold above 50. Most traders, I think, are stuck right now. They have to wait. we could get a nested head and shoulders top. Left shoulder, head, right shoulder, and then the right shoulder often has a smaller head and shoulders top. Left shoulder, head, right shoulder. But no good sell signal yet, and not a very good buy above 53. We've probably seen the high of the day, and I suspect we've seen the low as well. This is a low 3, 49, 52, so it's a higher probability sell than 52. We've also had 4 bull bars in the past 5 bars. Good buying pressure that will discourage bears from selling below 54. Testing the breakout point, we broke above it, we broke below it. Bears hoping for a decent sell signal bar for the low 3. They'd like to get 2 legs down, 1 pullback 2, but a lot of tight trading range here, and that makes it more of a limit order market. You can see bear bar 52, they bought below it, made money. Bull bar 53, they sold above it and made money. So it makes it really hard for traders. You know, if you're being asked to buy below strong bear bars or sell above strong bull bars, instinctively, you know the math is not as good as you need it to be. So it's not very good trading. Wedge, lower high, major trend reversal. Bull trend, bear breakout, lower high. But tight trading range and small body, limit order market. So not a very good looking stop order sell. What happens if we break above the top of the wedge 54? The bulls will try to get up to yesterday's high, but most traders are not. Most traders are trading with limit orders. Are we always done long yet? I don't think it's clear. You know, I have a slight bullish bias, but you know, let's see what happens with 55. Do the bulls get another outside up bar? Do you get a close above 54? Bulls trying to repeat this channel, but not a lot of eager bulls. The bulls have bought above 53, 5-tick trap, and the bears have sold above 53, made money. The bulls have bought below 54, bear bar, made money. So far, easier to trade with limit orders. Bulls trying to get closes back above the breakout point. They're trying to get another breakout. I am currently flat. Probably back to always in long. The bulls would like to break above yesterday's high. I still think the day is going to stay inside of yesterday's range. I am flat. Tight trading range trading. The problem is, to make money, you in general need wide stops, and it's better to scale in. And, you know, for example, if you bought above 53, 5-tick trap, but if you probably would have gotten out below 53, and it then would have made its money. So some bulls would have bought above 53, stopped below 48, and bought more below 53. And the opposite is true with selling below 52. Some bears would sell below 52, stop above 52. Others would sell below 52, sell more above 52, and then they'd make their money on 55. Hard to do, especially late in the day. You know, people get tired. I get tired. I'm hoping that we get something easy, but I suspect not. That they will probably remain a day with a lot of limit order trading. Similar between this and that. They're both similar channel. Here we had a gap down and a bull channel. Here we have a series of sell climaxes and a bull channel. But I think most traders should just wait. Wedge, lower high, major trend reversal. Decent sell signal bar, but tight channel and easier to make money with limit orders all day. So not a very good stop entry sell, 58. Still channeling up, bulls still buying pullbacks, either a fixed number of points, 2, 3, 4 points down, or just with limit orders below the prior bar. Another outside up bar, like 50, 53, 60. We've had a lot of them today. But tight trading range, I think best choice is flat. Bears trying to get the reversal down. It's a decent sell signal bar of 65, but a terrible environment for stop entry trading. So most traders are better off flat, waiting to see if the price action changes, which is not likely. It's probably going to remain a limit order day. 3 consecutive bear bars. Good for the bears. First time all day that they've had 3 consecutive bear bars. It's hard to believe, but it's true. However, it's not enough to make me sell the market or sell below 67, sell below 66. Still a very quiet day. Last hour, it becomes more difficult for limit order traders. A lot of limit order traders are willing to scale in. That increases the probability that they make money, and they can run out of time doing it at the end of the day. So it's I think more dangerous, more difficult. Right now, I think most traders are waiting for evidence of a sustained move up or down, a buy the close or sell the close finish. 3 bear bars, so probably sellers not far above 66, but I think most traders are better off just waiting. Price bar up, you can see the danger for the limit order bears. Remember, this is the end of the week, and what happens over the next hour affects the appearance of the weekly chart. The bulls would like the week to close on its high, and they would like it to close above as much resistance as they could possibly get it to close above. So yesterday's high is possible. And then get that October low. That's probably too far to reach in a day that is as quiet as today. I often buy at the market on surprise bars as they're forming, but I did not buy this. I did not sell either. I don't like limit orders in the last hour, even with the 4 bear bars. And I did not buy it because of the 4 bear bars. So I'm still waiting, hoping that we start to get a trend up or down at the end of the day. This is a little early for a trend to last for the rest of the day. Typically, if you have a trading range day, and you're getting a trend, if it's going to make it to the end of the day, it usually has to start around 12:30. If it starts around noon, it usually does not last to the end of the day. You could argue that it's a bull trend and it's a pullback, and this is bull trend resumption, and therefore the bulls have a decent chance of a resumption of the trend this early. But the day has been so much of a trading range day that I'm hesitant to bet on any move lasting very long. I need more evidence that tail on the top of 68 is not good for the bulls. Reasonable for bears to sell 67 high and scale in higher. So I think we'll probably pull back to the 67 high. You can always sell right here at the market 1 point higher, but I think it's better just to wait to see if we start to get a trend in the final hour. For the bulls, it's a pullback from the 68 breakout. For the bears, it's an end of the day bull trap. And you can see the limit order bears are sold above 67 made money. As makes sense, we're in a trading range limit order market and we have 4 consecutive bear bars. I'm neutral. We're oscillating around the moving average in a pretty tight range and much easier to make money with limit orders. For the bulls, a high 1 pullback from the 68 breakout, and for the bears, a bad entry bar for the end of the day bull trap. We're now in that time window when the market often has a buy the close or sell the close trend going into the end of the day. So we have the potential for a swing down or a swing up. I just think there's a lot of black bar selling pressure in here. So, but I'm open to anything. Even if we get a buy the close or sell the close trend, it'll probably be difficult to get more than 1 or 2 scalps out of it. Because by the time it looks convincing, there will not be much time left in the day. Kept 72 above the 67 low, so that makes it a small 2-legged bull flag, 1 pullback 2, instead of an end of the day trap. It's a breakout pullback buy. But as I said, I think traders are going to be hesitant to buy breakouts because then they're buying high in a trading range. And just like they're hesitant to sell breakouts, here we had a breakout of 68. More bears sold the close than bought the close. The bears tried to get a breakout 72. More bulls bought the close than sold the close. So it's an opposite day. Traders buying everything bearish and selling everything bullish. Everyone's ready to pile on, up or down. The bears had their chance 72, and they were unable to get 2 or 3 consecutive bear bars. And the bulls are trying now 73. Sometimes what happens is you can get a very sharp rally or sell-off because you have all the trend traders just waiting, and as soon as they start to believe that a trend is underway, they enter. So we might be getting that here. It's probably by the close, but I have to say I am not an enthusiastic buyer. In situations like this, a lot of times I'll look at the 1-minute chart to see if we're getting a series of consecutive bull bars closing near their highs. I don't like to see bear bars. I don't like to see bars with fairly prominent tails above or below. So, and this has both of that. So it's by the close, but it is really not the kind of rally that I want. I have not yet bought, but I do think the math is probably okay. However, you have to risk all the way down here, so you're risking 6 points to make 1 or 2 points. And if you take it, you probably have to be willing to scale in below 75 as well. And I don't know, at the end of the day, end of the week, to me, it's unpleasant to do. I'm letting it go. I wanted 74 to close more on its high. Still always in long, still by the close, but it's just not strong enough. So I'll let it go. What happens if it just keeps going up and up and up? I'll probably miss it. And what happens if it reverses down? I'm not going to short it. 3 bull bars at the end of the day. That tail on 4 in the shrinking bodies, see the tail on 74 in the shrinking bodies, is enough to make me just let it go. Sometimes when you have a end of the day trend, you get a sharp reversal. I don't think there's that much energy in the market right now, and therefore, if 77 closes on its low and then 78 trades below it, I doubt we're going to get much of a sell-off. There's not much trading going on. Nobody is heavily committed. What happens is you get buy the closed bulls, hoping for the trend to make it to the end of the day, and they get out below any bear bar, and they'll get out 4 or 5, 6 ticks below any bar, including a bull bar. So if it does go below the bear bar 77, you often get sudden selling. Bulls who bought selling out desperately to avoid a loss at the end of the day. For the bulls, this is a high 1 bull flag, but I can't imagine anybody taking it. If you're a computer, you can take it. But anyway, overall, a very quiet day. It's the kind of day when I make pizza money, enough to buy pizza. It's, I don't make a lot of money on a day like this. I make some, but not very much, because especially at the end of the day, I just get tired and I don't want to be taking a lot of limit order trades. I take some, but not all that many. Overall, it's a good week for the bulls. It's 3 consecutive weeks up from a 20% correction, which is psychological support, and the 8-year bull trend line. This is the weekly chart, and we're above the February low, we're above the April low, and we're right at the October low. But I think the real price is the November low. Here's the monthly chart. I've been talking about that. I think we are going above the November low because it's a reasonable location for bulls to buy with limit orders. And if you do something reasonable, usually you can avoid a loss. And on the daily chart, there's also a 10-bar sell climax. We had 10 consecutive bear bars. Never in the history of the stock market has that happened. So what we had was a spike and a parabolic wedge, and the market typically tries to get all the way back up to the top of the parabolic wedge, which is right here. So around 2,700, 2,690. So to me, it looks like we're probably going up above the November low, so 2,630, maybe up to this high, 2,690. So somewhere 2,650, 2,700 will be the likely top of this. There's also a possible measured move right here from this high, and it takes us up there as well. However, it's still big down, big up, big confusion, and it's likely that we will have to test back down if the bulls are going to go up to the all-time high. Can this be a bull trap and lead to a new low? Sure, but it's big enough up so that I think that we're probably in a trading range for at least a month or two. So and the market's now probing for the top of the range. So it looks like, up, somewhere up in here, and then test here, maybe test here, and then a bounce and sideways. Right now we have a parabolic wedge, low 1, and then low 2, and we're having a third push up yesterday and today. Might go a little bit higher. We have magnets above, and I assume once we get there sometime next week, we'll pull back for a week or two. But I doubt we'll go straight down. I'm here on Monday, but I'm not here Tuesday through Friday. And then the following Monday is Martin Luther King Day, and I'll be back the day after that, so I'll miss 4 days. 5-minute traders. Well, let me talk about the 60-minute chart. Spike up, spike up. When we had this and that, I said we're probably going to go up for at least a couple of weeks and get up to those resistance areas. And right now, small pullback bull trend. We're sideways for 3 days, but the pullbacks are still small. And the odds are we'll go at least a little higher. So it might be 1 pullback, 2 pullback, and then 3, and then a correction down either to this low or more likely down here over the next several weeks. 5-minute chart, 3 sideways days, lots of reversals. Yesterday we had a big rally. Bull channel, bear flag. Odds were we'd break below the channel, which we did on the open. And we had 5 bars down on the open to the 60-minute moving average, but a higher low compared to that low from yesterday. And the bulls had an outside up bar. When you have a 5-bar bear microchannel, usually the first reversal up, even if it's strong, is minor, and you're going to test back down. And we had that yesterday and again today. So outside up, yes, but probably a minor reversal. And then the bears got a double top with 1 and 7, 1 and 9 at the moving average, but 3 pretty good bull bars, strong enough up, probably buyers not far below. The bears sold off strongly 12, the bulls bought 13, and we ended up with a credible low for the day, a double bottom, 6 and 13, both with pretty good sized bull bars closing at their highs, and both at the 60-minute moving average, and both a higher low. The rally itself was not all that great. Small body tail on 14, pullback 14, pullback low 16, and then another. These are double bottom pullback buys. We have a double bottom and a pullback, so theoretically it's a buy above 15. Another pullback, buy above 17. Another pullback, buy above 22. But big pullbacks, big bear bars, a lot of sideways bars overlapping prior bars, prominent tails. This rally looks like a bull leg in what will become a trading range, which means we'll get a bear breakout and then sideways. And the bears tried to get the reversal here, wedge, 1, 2, 3. And then we got a high 2 bull flag. We got 1 more leg up. And then we got a reversal down 4 legs. Good bull bar 48, but tight bear channel, so probably a minor reversal up. And the bulls needed a small double bottom here. You can call it a triangle, lower highs, higher lows. But there were so many reversals, not a lot of bulls were willing to buy above 73. For stop entry traders, you could sell below 2, hoping for a swing down. I would not. We have a doji on 1. We have the 60-minute moving average just below. We have a low here, a major higher low here after a strong rally. It's a low probability sell below 2. Traders do not want to be selling that far below average when you got a doji here in support right here. The bulls, you can call it a micro wedge, up, up, up. You can call it a high 1 outside up. But the first stop order entry trade of the day that's worth considering is above 6. But even then, you could still wait. You could wait for 13. That was a higher probability trade. Anyway, if the bears are short below 2, I'd get out. I would not be short. 6 is probably a scalp up to around the moving average. And then we have a double top, 1 and 9, a decent sell signal bar. But with the 3 bull bars, probably the best the bears will get is a test of the 6 low. So probably buyers not far below. I would not buy the 9 low. Had I bought 6, and if I was swinging part of the trade, I would get out below 9. Aggressive bears can sell. I would not. And then we had the double bottom, 13. So I would get out of shorts and get long above 13. Disappointing entry bar 14, disappointing follow through 15, 16, 17, but still always in long. The bulls do not have to get out below 16, but they can. It's a low 2 at the moving average, and we may be forming a bear channel. If 16 closed on its low, I think the bulls would have to get out, but it did not, and therefore I think they could stay long if they wanted to stay long. If they did get out, they would buy again above 17. We have a wedge at 19. We tried to reverse down at 2, at 9, and then 19. It's a relatively bigger body and smaller tail than 18, so I think it's reasonable to get out below 19. I would get out of shorts above 22, and possibly buy, hoping for a small pullback bull trend. If you do not buy above 22, I would buy above 25 or 27. The bears tried to get another wedge reversal, 29, but those two bull bars, 27, 28, strong enough so that we'll probably get at least a small second leg up, and therefore 30 is a high one buy. And then 32 is that second leg up. I think it's a reasonable short below 32. I'd get out of longs and I would short. I did short. And then instead of going down, I thought 33, 34 were disappointing. I get out break even on 35. The bulls have a high 2 at the moving average, 35, but 3 dojis. I think there'll be sellers not far above. They got 4 bull bars, 7 bars without a bare body, and therefore not a great short below 39 or below 42. Yet the context was good. It's a failed breakout above a credible top and a buy climax. If you're selling, I would get out of shorts 4 or 5 ticks below 39 and definitely below 40. I get out of longs below 39, definitely below 40. Big bear bar closing there is low. And how do you short? I thought 43 was a surprisingly big bar, and we'd get at least a small second leg down. So you could either sell the close of 43, sell below 43, sell below 44. 45, another bear bar, but a fairly conspicuous tail, and we're at support. The December 10 low and around the open of the day. And limit order bulls are making money. Limit order bears made money. We're getting bad follow through after every bear bar. This is probably a bear leg and a trading range, which means we'll probably get a bull leg. I would get out of shorts above 48. You could buy, especially if you can use a wide stop and scale on, scale and lower. If you did not buy above 48, the second buy is above 50 or above 51. And then it was basically just a tight trading range and limit order market. Do you get out of longs below 52? Well, 4 bull bars, I would not. Do you get out below 54? I might, because then it's a low 3, low 1, low 2, low 3. I thought it was limit order trading. And a lot of the bulls, if they bought above 48 or above 50 or above 51, would just hold and see what they get. I personally would get out below 58. The breakout 56, 57, not all that strong. 58 closing on its low. And you can argue a wedge, 1 pullback, 2 pullback, 3. And I would not buy up there, and I would not sell on the way down. The next trade, I think you could sell below 69, hoping for a bull trap, but 68 is not all that big, so it's not that climactic, and not that many bulls have trapped. I suspect there probably are buyers below 69. I don't know that we're going to go up very far. Anyway, if a bear sold below 69, I'd get out maybe a point above 72. I definitely would get out above 73. And the bulls, if they wanted to take a chance on a buy the close finish, they'd buy above 73. Buy the close, sell the close, really not all that good. And you could argue 7 and 8, but 8, you're right at the moving average and around a 50% pullback. And then 3 bull bars here, 14, 15, probably always in long on 15 or on 18. But really terrible follow through. 18 closed far above the moving average. We're probably going higher. But if you buy the close of 18, or if you buy above 18, your stop is below 17 or below 13, and it's probably okay to get out of longs below 19 and then look to buy again above 22. 28, 27, 28, surprise. So it's buy the close 28, not great. Could you buy the close 37? I thought there'd be sellers above 32, so I would not buy that close. 43, surprise bar down, probably going lower, so you could sell that close. 45, same thing. There's room for a little bit more down, maybe to the open of the day. And then 74, buy the close. 75, buy the close. Not very good. Limit order traders, every prior high, they sold above it all the way up all day long. And every prior low, they bought below it, scaled in all day long. That includes on the sell-off here. I said there would be bulls who bought the 35 close, bought the 35 low, the 40 low, and the 44 low, the 46 low. I bought some of those. I don't remember which ones, but I was buying with limit orders, especially down here. In terms of higher probability, easier limit order trades, probably the first one was buying below 14. And then none of this is all that good. Selling above 33 is probably okay. Maybe selling above 41, not very good. Buying below 49, probably okay. And then in here, probably selling above 59, maybe selling above 62. And here, not really all that good. So overall, a lot of work, not a lot of easy setups. And so to me, I don't like this I like making a lot of money. I don't like making a little money. And today's a little money day. So I feel like I'm here all day working and I'm not getting paid the way I'm gonna get paid. But you've got to trade the market that you have. And this is what we have for today. And I did not put on any option positions. I think we're going to pull back at some point in the next week. So I did not put on any positions because I'm leaving on Tuesday morning. And I don't want to be thinking about positions when I'm away. Good question. Do you have rules for buying and selling intra-bar during quick moves up and collapses down? When do you do it and when do you not do it? Yeah, I sometimes talk about the 1 minute chart. So if I see, 2, 3, or 4, usually 3 or 4 bars closing on their highs, we're probably going higher. And the opposite is true. If the context on the 5 minute chart is good for a sell-off, if I start to see a series of bear bars, increasing size bodies, so small, medium, large, a lot of times I'll just sell at the market at the close of that bar or on a stop below its low. Here, breakout, a bear bar, we're probably going lower. And if the market's sideways and I'm starting to see a lot of bull bars, especially bars closing on their highs, I start getting interested. I was not looking at the 1 minute chart today, but if I was, and I start to see 3 bull bars, 2 closing on their highs, I'd be inclined to buy at the market, expecting it to go higher. So I want to see at least 2 bull bars closing on or very close to their highs, and preferably 3 or 4 consecutive bull bars, or 4 out of 5 or 3 out of 4. And to sell, the same thing. I want to start to see a series of bear bars closing near their lows. So even if you sold this, put a stop up here and scaled in higher, you still would have made money. So series of bear bars, especially increasing bodies, I probably have to go back like this. I see that, we're probably going lower, so I'm looking to sell. But, I think most traders will make more money not doing that, simply taking signals on the 5 minute chart. A lot of times, if I see something like 43 happening, I know we're trying to reverse down. I know this is probably a bull leg in a trading range. So if I see 43 happening, I'm going to be selling usually as the bar is forming. I was talking about the bull trend would probably convert into a trading range, and we probably would get a close below that red line, the top body and the breakout point. And I was expecting that. So when I see 43 starting to fall pretty quickly, I'm going to sell, and I did sell. Okay, question in general, if there's a gap created above a bear bar, for example, bar 26, is it more likely to be filled and retested in subsequent bars than when there's a gap above a bull bar, like above 17? Yeah, I think that's true. I think the more, if you see bear bars and you're buying, it's a weaker buy setup, and there'll be more bears selling above and scaling in higher, betting that will come back to the top of that bear bar. So in general, that's true. Question: if you were to buy a put hoping to reach the December low, would it be best to buy one expiring in a few weeks out, or longer expiring a few months out? I could talk a lot about that, but let me just say a couple things. It took several weeks to get here. It's unlikely we'll get here in several weeks. If a person were to buy an E-mini put, like a 2400 put, out of the money put, or at the money put, 2590, 2600, something like that, it probably would take several weeks to get down here. And more likely we're going to go sideways. More likely this is what the next week is going to look like, sideways. Maybe a little bit higher, maybe a little bit lower, but mostly sideways. So if I were looking for a test of this low, I would first wait for either an extreme buy climax or for it to start to go sideways. And then I would buy a put, and I would have to decide what my goal is. If it's a buy climax and we're getting a reversal, I may get a lot of profit in just a day or two, in which case I might buy a put that expires 2 or 3 weeks out, even sometimes 1 week out. If I thought that it may go sideways for several weeks and take a couple months to get down to the target, in general, I would not take that trade. I'm looking for fast money trades where I make money in 1 day, 2 days, 5 days, sometimes a week or two. But if you're asking if I had to take a trade for a test of this low, I probably would be buying a put at least 2 months out, like March, and I probably would do a put spread because of time decay. So a trader might buy, 2590, 2500 put spread. You'd make money down to 2500, right? You could always buy 25. The spreads here are so big. Let me put the spider. Okay, so let's say we're at 2560 right now. You can buy 2560, 2540 put spread, and you stop making money once it hit 2540, which is close to that low. If you buy a 260 and sell a 230, you'll get so little money for the 230 that it's not worth it. And that's the problem with a very wide spread. If you buy a put and sell a lower strike put, and the lower strike put is far out of the money, you're going to get very little money for it. Yet it caps your profit. So I usually don't do that. Most traders don't do that. Instead, they'll either simply buy a put, an outright put, like a 260 put, or 250 put, or 258 put, or something, somewhere up around here, right? They'll just buy the put and take their chances. Or they'll buy a put spread with a tighter spread. So like buy a 258, 250 put spread and not worry about the market getting down here, just expecting it to drop somewhere down here or here. And if the value of your put spread doubles, you take your profit and move on to the next trade. In general, most traders who buy options, calls, call spreads, puts, put spreads, do not hold them to expiration. Most traders take profits before expiration. A general rule, one of the rules that I use, and you sometimes hear it on television, Dan Nathan uses a similar rule. If you buy a put or a call or a spread and the price doubles, take half or all of it off. If the value of the option decreases by half, just get out. So if you buy anything for $1, a spread or a put or a call spread, doesn't matter, and it becomes $2, you take profits or take a lot of it off, maybe half of it off. On the other hand, if it falls to 50 cents, you just exit. What do you think about the euro after today's sell-off? I think it's a problem for the bulls. Whenever I see a big bear bar like yesterday, if I'm long, which I was, I usually just get out and wait to buy again. The bears view this as a failed breakout, just like the bulls view this as a failed breakout. And they see the bears see 2 legs up, 1, and then sideways, and then 2. Some computers will say 2 started here, others will say the double bottom, others will say here. It doesn't matter. It's 2 legs up, 1, pull back, and then 2. And pretty much trading range for the past 6 months. So for them, it's a sell signal. For the bulls, they can either get out below yesterday's low, they can wait for 3 bear bars to get it out. They can put a stop below this or below that and look to scale and lower. Not good choices. And for the bears, they could sell below yesterday's low, betting on a failed breakout and a big low 2, leg 1, pullback, leg 2. I still think it's more likely this is a pullback and that will go higher. We have a spike pullback wedge channel and a big magnet up there. So I think we're going up here, but we're channeling up a little, down, up, down. This is actually a little bit above that. This is above that, and we're getting slightly higher highs. So channels are really difficult to trade because by the time you're convinced it's going up, it's like a trading range. You get a deep reversal, and you have to use a wide stop, or you have to get out and look to buy again lower. And when it comes time to buy lower, there's something wrong with the buy. So it's basically a trading range that's tilted up. And for me, it's not fun trading, but it's reasonable trading. So I think a lot of the bulls who bought get out during yesterday or below yesterday's low today, and they'll look to buy again if we get a bull bar on Monday or Tuesday, hoping that we're just channeling up. And for the bears, reasonable short, but 6-bar bull micro channel, first reversal down, probably minor. I think it's probably better to wait for a micro double top and then sell. Okay, question, what are 3 things that you tell people to focus on as the day starts? Magnets, limit order, stop orders, trend. If you've been in the room any length of time, one of the first things I'm expecting in the open is a reversal. 80% of days have at least one reversal in the first hour or so. Only 20% of days trend right from the first few bars all day. So you have to expect a reversal. And I look for good signal bars. 6 looks good, 13 looks better. Excuse me. And I prefer second entries and double bottoms like that. Here's a double top. But with 3 decent bull bars, I thought the day was always in long. So instead of selling below 9, I'd want a second entry sell. Below 11, not good. So to me, I would not take that sell. So I'm looking for a double bottom or a wedge bottom with a good buy signal bar, or a double top or a wedge top, and a good sell signal bar. And I'm looking for at least a couple bars going in the same direction. Here we had 3 bull bars. Here we only had 1 bear bar, 1 bear bar. We have 2 here, but it's small, 1 bear bar. And here we have 3 bull bars. So that's a sign of bulls owning the market for more bars, sign of buying pressure. A chart has both price and time, not just price. And sometimes trends begin with time instead of price. So if you start to get a lot of consecutive bars one way or the other, it becomes increasingly likely that it's the early stages of a trend. So, but that's what I'm looking for. Consecutive bars, bull bars closing on their highs, bear bars closing on their lows, double bottoms, double tops, wedge bottoms, wedge tops, and then finally a strong breakout. Okay, I'm losing my voice. Hope everybody has a good weekend.